Hello there, in this video today we're going to be talking about the full accounting equation. So it's important you've already watched the video on the basic accounting equation because then this video will make a little bit more sense. So what we're going to be doing is we're going to be looking at the 5 accounts of the business, the 5 categories of accounts, because every single account can be categorized into one of those 5 categories. And we're going to be talking about how those accounts relate to each other. Because we're going to have it so that at the end of the day, the debit side of our accounting records is equal to the credit side of our accounting records, and they will balance. So let's talk about what goes on each side. And to do that, let's start with the basic accounting equation. So the basic accounting equation says that your assets is equal to what you have borrowed, your liabilities, plus your owner's equity, which I'm going to abbreviate now as OE, your owner's equity. So then, we're going to add profit into this equation. So how does profit fit in? Well, everything you own is equal to what you owe to other people, plus what the owner has contributed, plus the profit that you have made. And you might be thinking, what does profit have to do with this equation? Well, profit is the relationship between revenues and expenses. Profit is equal to revenue minus expenses. And when we look at our full accounting equation, we can add profit into the equation. So we can have assets is equal to liabilities plus owner's equity plus profit. Everything you own is equal to what you have borrowed plus what the owner has contributed plus any money that you have made as a business. So let's put this accounting equation together with all of the accounts of the business. I'm going to abbreviate revenues to R, expenses to E, assets to A, liabilities to L, and owner's equity to OE. So now what we have is everything the business owns, my assets, is equal to the liabilities, what I have borrowed, plus what the owner has contributed, plus the profit that I have made. But I want to express, as I said, each of the accounts to show what they would look like. So instead of profit, I'm going to go assets equals liabilities plus owner's equity plus my equation for profit, plus revenues minus expenses. Everything I own is equal to what I have borrowed, plus what the owner has contributed, plus the money that I have earned from running my business. Now remember that at the end, well, maybe not remember, maybe you didn't know this yet, but all the profit you made gets at the end of the financial period transferred over into capital. Because when you earn money, it increases what the business is worth to the owner, and it therefore increases the value of the business. So, as I said, I want one side to equal the other side. So I often want to have expenses, not on this side as a negative, but on the other side as a positive. So remember when you do algebra, what you do to one side, you do to the other side. So over here, I would add expenses, and that would cancel that out and make it like it doesn't exist anymore. And then I would go plus expenses on the opposite side. So what I now get is I get my assets plus expenses is equal to liabilities plus owner's equity plus revenue. And what we have now is all of our accounts on one side and the remaining accounts on the other side. So on this side, if I add up all the assets my business has, if I add all my assets, add all my expenses, the number I get there will be exactly the same as the number I should get if I add up all my liabilities, add up all my owner's equity accounts, there's only 2, capital and drawings, and then I add in all of my revenue. And this allows me to check the accuracy of my accounting records. Because if they don't equal, I know I've made a mistake somewhere. So perhaps I have forgotten a 0. Or I've accidentally classified these accounts incorrectly. It won't balance. And then I can find that mistake, go back through my records and find out why it doesn't balance. So what we do is we actually name the sides of the account. And I name this side my debit side. And these accounts are considered to have a debit nature. And then on the other side, I name the other accounts credit accounts, and they have a credit nature. So liabilities, owner's equity, and revenue accounts, they are considered credit by nature, and they're recorded normally on the credit side, which is actually the right-hand side of your accounting records. And assets and expense accounts, they are considered debit, and they're listed on the left-hand side of your accounting records. And at the end of the day, they will balance. and they should work. And if they don't balance, you know you made a mistake, you go back through and you find where that mistake was. So hopefully this video made sense to you and you now can kind of understand how these accounts relate to each other and how we can use them to check the accuracy of our financial records. Thanks for taking the time to watch this video, and I'll see you next time. Thanks. Bye.